Welcome to ETF Leaders, powered by the New York Stock Exchange. I'm Judy Shaw, and joining me today is Matt Lewis. Matt is head of ETF implementation and capital markets at American Century Investments. Matt, thanks for joining me.
Thank you for having me.
So Matt, tell us about the strategies that American Century is delivering in ETFs.
Sure. Well, American Century has launched ETFs. We have 5 products out there. We've been out for it's over a year now with some of our products. On the equity side, we're doing very unique, different strategies, which they're index-based products, but they are dynamically shifting based upon the market environment. So we delivered in the growth space, in the value space, and the international space. But say for let's take our growth product, where we're looking to screen out and make sure that we're picking quality companies. And then also dynamically shifting between pure growth companies and stable growth companies so that the product gives an outcome that works over the cycle of growth. The same sort of methodology works for our value product, which is between value-oriented companies and income-generating companies. And then our international products is between just value and growth.
So what trends do you see impacting ETFs and the corporate fixed income market?
Sure, that ties into what we're doing in the corporate fixed income space. I mean, what we look at is that, right now, if you look at a typical corporate benchmark, you will see that it's highly allocated to triple B rated bonds. I mean, triple B the issuance has been enormous in the past 10, 20 years, from where it was 15 to 20% back in the 2000s to over little over 51% today. So what we're trying to do, though, is to have a systematic approach so that we can pick the quality companies out there, good companies out there in each of the quality buckets that we feel are going to be able to service their debt. And then layering in our fundamental analysis to do a portfolio construction that delivers a product that will have a good risk-reward trade-off based upon the current macro environment.
What are key considerations investors should think about when trading ETFs?
Sure. In my role as capital markets, I do talk to lots of ETF investors about this. I mean, one key thing that I like to say is that the volume on the screen is what has been traded. It's not what could have been traded. And we have to remember that ETFs have sort of 3 layers of liquidity. It's on the on-screen market. It's also there's the order book. There's market participants out there, liquidity providers, willing to make a market for you. They just might not be showing it to you on a screen. And then ultimately, the underlying liquidity of the ETF sort of drives the liquidity of the ETF shares because of the creation and redemption mechanism. Liquidity providers could easily create and redeem shares based upon the demand of that ETF.
So volume, do you think that it should be a factor when choosing an ETF? And what should investors look at to determine which ETFs to use?
Sure. Volume, I can see why would be a consideration for investors to use when choosing an ETF. They want to be able to know that they can get in and get out when they're making their investment decisions. But as I mentioned in my previous answer, there is plenty of liquidity for ETFs, and that on-screen volume is not the only volume that's there. So I like to advise clients that what they need to really look at first is like, what is their goals? What's their objective when investing in a particular ETF? And diving down, looking under the hood to see what the methodologies that are being used to in a particular ETF to match their goals. And liquidity or volume should be a secondary concern, because there's individuals like me at American Century, but at other issuers too, that can help them work through getting them to be able to implement what they're looking for.
Well, Matt, thank you for joining me.
Thank you.
And that's ETF Leaders, powered by the New York Stock Exchange.